So we really have purposefully tried to keep the deal structure as clean and easy as possible. And that to me is part of our value proposition.
Welcome to Unstoppable Podcast with Harry Sardinas, inspiring conversations with influential millionaires, investors, thought leaders, entrepreneurs who are making a massive difference with their innovative products and services, and sharing the challenges and wisdom of how they sold their first million.
How would you like to make your first million? And today we have Brian, which is the founder of the Texas Freedom Fund, but also he's a real estate investor. So, Brian, tell us, what are the 5 steps that you recommend entrepreneurs in order to make the first million?
Well, I'm sure. Thanks for having me on the show, by the way, to start off. But I'm sure everybody's kind of got their own unique formula. But all I can say is what's worked for me. So you got to start out with, your customers. So for what we're doing right now, our customers are our investors. So go out and have lots of conversations with people. I like to vet the idea and really vet it all the way before we go operationalize anything. So I think I probably talked on the order of 100 investors before we put our fund together just to make sure some of what we were thinking about was going to worked well, and get all that feedback and really be able to weave that into the early conversations. So that was step one. Step two after that for us was check out our unit economics. So we needed to make sure we could cover our costs for all of the administrative overhead, all of the attorney's fees, make sure we understood how all that was going to work, and be able to weave all that into our fee structure before we actually roll things out. And then the third step after that for us was to model the assumptions. So, what is this thing going to look like at scale? It's great that it works well on a unit basis, but then once you start to apply scale to it, what does the model look like after that? And then after that, we went out and talked to a bunch of experts in the industry for the last 6 months, or like actually the first 6 months of this venture. We probably talked to about 15 securities attorneys and about 20 accounting firms and a bunch of funds administration firms too, just to figure out what the market looked like and to figure out who was going to be the very best set of partners for us. And the team that you put together to be able to execute is a really important part of any new venture. And then after that, the fifth step I wrote down is, avoid unnecessary expenses and order your priorities ruthlessly and then iterate. So anything that you're starting that's new by definition has probably either not been done before or it's not been done before by you with the specific way that you're doing it. And I like to call that dumb tax, so you can pay a lot of dumb tax if you don't order things the right way. And there's always going to be lots of people who show up to sell you things in your journey along the way. And you got to really be very ruthless in what you're trying to spend money on because you don't have a lot of resources when you first start things. In fact, I think that's part of what gets a lot of entrepreneurs into trouble is that they end up spending money on all these vanity things, websites and stuff that you're going to need in the long run, but maybe that isn't the optimal way to use your time and your resources when you're first getting started. So you really need to be very lean with your approach.
Talking to your customers, something that is key, Brian. I love that you brought this up because exactly what you do, what we see a lot in entrepreneurs, they want to have a business and they worry about the logo. They're paying a lot of money with the logo. They're paying a lot of money with the website. They're investing a lot of things and allocating time and resources to speak with the client to see if the product that they want to create um, uh, the market wanted and how much they want to pay for it, and they are actually happy with the product or they want an improvement. This is something that startup founders and people from going to 0 to 1 million, um, they get lost in translation, right? And then they'll give the importance to the clients, and especially in this part 0 to 1 million in the very beginning, um, it's all about speaking with the client. It's all about getting feedback, right? So I'm glad that you brought this point, and I think is very important. However, Brian, for you to be from a real estate investor, a successful real estate investors, to move into, I got a degree in chemical engineering, and you sharing with me a little bit more about an oil and gas fund and cracking and all these. It sounds complex, Why? Compared with property, that is something that everybody understands. You know, you buy a property, you rent it, or you do a commercial, you get rent, and this is something that everybody can understand. And you were ready, we're doing amazing doing this. So, what led you to make that change, to make that pivot to something which is a bigger game, bigger numbers? And I got a degree in chemical engineering. I can tell you that it sounds complex to me.
Well, it is complex, but I think the more complicated part, at least for me, of what we're doing is done by our operators. They're the ones out in the field, they're the one with the expertise. For me, I'm a deal person. I'm a deal junkie. And so I've been doing real estate projects for 20 years, and there's really not that much difference. And they call things different things. There's different accounting methods. But at a deal level, standpoint, the investors care about the same sorts of things, right? They care about the returns, they care about the tax benefits, they care about how long their investment's going to be tied up. They care about the waterfall structure. What everybody's looking for with a great deal is a CD with a lottery ticket tied to it. So, we've actually tried to structure our offering like that. One of the things I've learned in the deal business for the last 20 years too is that a confused mind says no. So we've really very much tried to make the deal as simple as possible. It's just a simple split. That's it. If you start talking to, retail accredited investor types or people that are, normal folks, they're smart folks, but you start talking to them about hurdles and clawbacks and this crazy structure, and people's eyes roll over and they just, they decide to go do something else. So we really have purposefully tried to keep the deal structure as clean and easy as possible. And that to me is part of our value proposition. Most of these deals that are put together, people have to invest on the order of $250,000 to get into them. And we very purposefully have structured ours to with the minimum investment size is $25,000. So, that's all part of just things that I've learned along the way. There's really the same sorts of things that people care about for these deals that they care about in real estate deals. It's just a different industry.
Follow us for more interviews with world's most influential, audacious entrepreneurs that overcame challenges and adversity, providing you with the blueprint of how they sold their first million so you can grow your business exponentially.